Welcome back. We can't get to that closing bell quick enough after another tough week for the markets. But before we get there, we will have an opening bell on Wall Street. And along with that, let's hit a pre-market mover in Micron. Shares of Micron in focus after the chip maker reported mixed Q4 results and another muted outlook for revenue. And I would argue it's more than muted. So Micron out here with an outlook for sales for the current quarter, $4.25 billion. That would be down 36% quarter over quarter. The street was about at $6 billion. So that is a whopping, huge FedEx-like earnings guidance whiff here by Micron. You hop into the conference call. You have the CEO and the CFO talking at length about worsening demand backdrop for its various chips. And in some cases, they use the term significantly worsening. So you did not get the sense that things are getting better anytime soon for Micron. But still, the stock is not falling off the cliff. You read some of the analyst commentary out this morning, and some are starting to view that the bottom is perhaps in Micron shares because things can't get any worse.
Yeah, and I mean, this just kind of joins the wave of other chip companies that had already either warned or just had dismal quarters themselves. And it's really in the face of some of the demand and the macroeconomic conditions that all of them are citing. But I'd love them to go even more into whatever those macroeconomic conditions are, because we know, of course, that a lot of companies, even as they're citing this within their earnings reports, it's everything from how much you're paying employees all the way to these macroeconomic conditions can range from that to citing, war between Russia and Ukraine. So if we're getting more specifically around the chip market, one thing that did stick out over the quarter, they said softening macroeconomic conditions have led some customers to reduce purchases of DRAM. And that's what you were going to say?
I was going to follow it up because they followed it up after that sentence. The long-term outlook remains strong. Well, yeah, long-term, we're not even going to be here anymore. I'm just getting tired of some of these conference calls. I can't take it, Brad.
What are
you guys talking about? Your quarter stunk and you warned by $2 billion. Just tell it to us straight and take the analyst questions.
Right. Just quantifying, I think, a little bit more of what that outlook actually is, whether that's, what we heard from Nike in 2 to 3 years, or whether that's what we heard from VF Corp in 5 years from now. Of course, over a 5-year period, perhaps things will start to turn around. And especially in the chip market, where we know that there are so many investments breaking ground within this industry to bring some of that capacity domestically here in the U.S., that should do wonders. And you would hope that by that time, 5 years out from now, that we're seeing much more of the ramp up in capacity and the nano manufacturing that needs to take place in this industry too. And so for Micron, for AMD, it's been a dismal week for the semiconductor stocks as we've been tracking as well.
But in the long term, Brad, everything looks great. It's amazing. Nike sneakers going to be selling. We're going to be buying Micron chips, and life is beautiful.
Long term, we own houses too.
Yeah, well, I don't know about that.
Yeah, exactly.